Now let's bring in Callum Henderson into the discussion on currencies. He's head of global currency strategy at Standard Chartered. Big gains in 2 weeks, Callum, for the Singapore dollar following the GDP forecast upgrade, yet it wasn't really that impressive. How come?
Yeah, that's right. I mean, the Singapore numbers were very, very strong, as you rightly said. But Singapore is largely an externally driven economy, something like 190% of exports to GDP. So we would expect the Singapore dollar to lag other better performers in the region, but it certainly has rebounded quite sharply. That's encouraging. But we like some other currencies within the region that are more focused on domestic demand, such as, for instance, Indonesia, India, and also Korea.
I think we've got Patricia Wee standing by now in the Singapore studio. Trish, it's been a really significant day yesterday with the Singapore GDP forecast upgrade, but not really for the Sing dollar. I mean, what did you see in the currency markets?
Well, the Sing was the worst performer this year. It was slumped to 1.8%. And despite the euphoria yesterday, yes, Singapore ended its technical recession. Well, the markets were still doubtful because if the Sing will be heading up anytime soon, traders are telling me there are two reasons, like what Callum said just now, the external sector. They need to see that the rebound in the external sector is sustainable. They're saying it's all because of the bounce came from replenishing of depleted stocks. So they need to see the external sector recover first before they price in more Singapore dollar gains. But secondly, and more importantly as well, they also zoom in on a lack of price pressure because they know that inflation has always been a core area for MAS in its currency policy. And last 2 months, we actually saw deflation rather than inflation. Headline CPI in Singapore for April and May was actually contracting. Based on our survey, for the Bloomberg survey, we actually see that the Singapore dollar will be pretty much flat where it is for the rest of the year. Economists are expected to trade at 1.46 at the end of the third quarter and at 1.45 at year end. So it's not very far from where we are now. The next MAS policy
Callum even has it at
$1.45
for the third quarter. Callum, are you going to be changing your forecast anytime soon? Or are you going to be sticking with that?
No, we're slightly more bullish than the market consensus. So we do think that the Singapore dollar has modest room to appreciate, but we totally agree that the MAS is in absolutely no hurry at all to do anything on monetary policy. There is no inflation, indeed, as Patricia said, that the price pressures are actually falling. We're actually in a deflationary environment in the short term. So the MAS will keep policy on hold for the foreseeable future, definitely.
Callum, when do you think it's time to get back into such trades for open-ended economies, like the Singapore dollar is one of them, and of course Malaysian Ringgit and Korean won as well? The open economies. Yeah.
Sure, probably the best time is Q4, where we think that India, Indonesia, Korea will lead the way because of much stronger domestic demand, particularly in Indonesia. That's definitely our top pick. But the Singapore, Malaysias of this world, perhaps Thailand also, will start to see some pickup in Q4.
Aside from pickup, do you expect them to actually outperform those domestic-driven economies, currencies, simply because they were sold off so much and they actually, the economies actually had the worst off during the whole global crisis. So do you think that, because of this bounce, because of the slump, the bounce could be, the momentum could be stronger?
They'll definitely pick up. They'll definitely rebound. For them to outperform currencies that have higher yields and have a more balanced economy will be tough.
Okay. Kathy?
Callum, I wanted to pick up on the South Korean won because it's been one of the best performing currencies in Asia until June, and that pretty much changed in the second half of the year. It's already weakened about 5%. Why has that been the case?
Yeah, that's right. Korea has led the way in many ways. It led the way into the downturn. It led the rebounds, and also it led the correction over the summer. Summer is typically a very unfriendly time for risk appetites, and indeed we've seen a pretty volatile time over the last 2 weeks for the Korean won. But we remain overweight on the Korean won. We think that prospects there are bottoming, and there's been a huge turnaround in the current account balance. So we like that currency.
So it's the best proxy to the recovery theme you're seeing in the Asian region. Is that what you're saying over the Singapore dollar as well as the Taiwan dollar?
That's exactly it. That's exactly it. Korean, followed by the Indonesian and also Indian.
Well, what do you make of the correlation we're
anything...
seeing between Korean stocks and, oh yeah, Trish, and the won? I just wanted to pick up on this because it's really interesting. When you look at the correlation on the Bloomberg, the analysis suggests that generally when stocks rise, the won also gains.
Yeah, that's right. It is a bullish play on the global economy, and we are bulls on the global economy to the extent that we believe the worst is over and that the economy is gradually recovering, particularly in Asia.
To what extent is the Korean won still being affected by dollar funding issues? Because I'm hearing that in spite of all the currency swap arrangements and all that, they are still facing a bit of dollar funding issues. So every time whenever risk aversion kicks in, the Korean won is actually affected quite a bit.
Well, I mean, they do have a specific issue through the end of August to repay between $1 and $2 billion in terms of loans. The Bank of Korea has helped with that. So it's a temporary move, but we think that's generally improving.
Right. Okay. Apart from these currencies, do you actually recommend any relative value plays, like maybe not against the dollar, but maybe long those currencies as you suggested, and short the high yielders? Maybe?
No, exactly that. I mean, we do focus on relative value plays, particularly the likes of Indonesia and also Korea, against those currencies which we think will lag, such as Singapore and Malaysia.
Oh, what about the Indian rupee? Because I think that's also one of your top picks there, Callum.
Yeah, that's right. We still like the Indian rupee. We're overweight on that currency as well. There are temporary concerns with regard to the budget. Obviously, the rating agencies have made a number of important comments, but we think that the rupee will get over that and it will rebound.
Okay, so if you were to rank the three top picks that you've just shared with us, the Indonesian rupee, Indian rupee, and the Korean won, which is going to be at the top of the list?
Indonesia at the top, Korea second, India third.
How come? How come it's the Indonesian rupee at the top?
Well, we like the political story. We like the economic story. You have stability there. You have reasonably strong growth. You have a more balanced economy. The external balance has rebounded. So that's our top pick.
But, Callum, I noticed your three top picks would oil. They are all very dependent on oil. Would the oil factor come into play anytime soon? Because there are concerns that the rising oil prices could actually affect current account balances of these countries.
No, that's an important point. Rising oil is obviously a negative for the region as a whole, with the one exception of Malaysia. But we think that oil will gradually rebound rather than anything like what we saw before the crisis.
Callum, which pretty much brings us to the commodity story here and another commodity play, the Malaysian Ringgit. It's one of the largest producers of palm oil and rubber. The Ringgit has done not that well enough. But what are the prospects in the second half? Could it do better?
Yeah, we look for a rebound. So we're looking for a move back towards the 335, 340 area. So quite a chunky rebound. But as I said, it will lag other domestic demand currencies such as IDR.
And what about the fourth quarter? You got that at 335 to the dollar. Are you going to be revising that?
No, we're unchanged for the time being.
Okay, we'll talk about the Philippine Peso, one of the biggest laggards in Asia, when we come back. Callum, just stick around with us. After the break, more currency trading advice from Callum Henderson. So send us your emails. Be back in 3 minutes. And we're back with Callum Henderson in Singapore of Stand Chart for more on his picks. Callum, I wanted to pick up on the Philippine Peso, one of the biggest laggards in Asia so far this year. It's got a lot of problems. It's got slowing remittances and the budget that the government's got to worry about. And you're not so upbeat about the currency because of this.
Yeah, that's exactly right. We are neutral on that currency, whereas we're overweight on other currencies. It's a mixed picture at the moment. The economy seems to be seeing the worst of things, and it appears to be stabilizing. But as you said, there is the budget concern, there are political issues, and also remittances, which are crucial to the balance of payments, have been slowing quite sharply. So neutral overall for that currency.
So your forecast for the peso, 46.50 to the dollar in the third quarter, are you going to be keeping that or revising it?
No, we're keeping that for now. We do think that there will be a sizable rally in Asian currencies in the second half of the year once we've got the summer volatility out of the way. So we think that the Philippine Peso will be one of those that lag the rally in other currencies.
Callum, aside from the Philippines, right, India also receives quite a bit of remittances as well. How much does that actually feature into its the currency play?
That's exactly right. Remittances into India and also Pakistan, of course, are huge. So that's a positive for the balance of payments, and that's increased sizably over the last few years. So that should help cushion the fall in risk appetite that we've seen recently.
Callum, we got an email coming from Andy, one of our viewers here. Andy from Houston is asking, what is your gut feeling about the ratio between the dollar and the renminbi in 10 years?
In 10 years, a very tough call, but my gut feel is certainly that it will be lower than where we are now. The balance of payments is exceptionally strong in China. Obviously, the trade surplus has fallen, but if you look on a multi-year basis, it's very, very strong. And of course, to some extent, we're seeing a shift from west to east in terms of economic power. So I would think that the Chinese yuan in 10 years will be much more widely used and will be stronger than where we are right now.
Is it going to be the global reserve currency in 10 years?
That's doubtful, but it could certainly be on the way to being one of them.
Callum, well, if it's not going to be a global reserve currency yet, does it mean that you don't see it fully convertible in both the current account and the capital account in 10 years' time?
As you know, it's tough to give an exact timetable for when we'll see full convertibility, but within the next 10 years seems reasonable, a reasonable time frame ahead of the 2015 rebalancing of the SDR, which is a key focus. Okay. But quite hard at the moment.
We actually had the central bank's FX reserves data out this morning. Sure. It was about 2.1 trillion FX reserves. The rise was phenomenal. It was about 700 over billion compared to 178 billion in the second quarter compared to just 7.7 billion in the first quarter. How do you see this factoring in as far as China's risk appetite for U.S. Treasuries is concerned?
Well, the rising FX reserves is obviously a function of capital inflows into China and the activities of the authorities to keep dollar China relatively stable. We expect that to continue near term. And obviously, at the margin, Asian authorities and Asian central banks will diversify some of their portfolio into other assets. So it's a virtuous cycle in the sense of capital inflows, FX reserves, and diversification.
If it's going to be a virtual vicious cycle, as you say, what impact is that going to have on the dollar? Because after the report came out this morning, the dollar briefly dropped against the yen, but has recovered since.
Yeah, I mean, as I said, price action over the summer is typically very choppy and trendless, and that's exactly what we've seen. However, if you take a step back, the global economy does appear to be stabilizing, and that's unequivocally bearish for the US dollar because it means that risk appetite will rebound on a trend basis. So we stick to a bearish call for the US dollar and a bullish call for most, not all, but most Asian currencies.
Hey, Callum, we got an email here from Bonnie from Singapore, and the question is, what do you think of the relationship between the Aussie and the New Zealand dollars? The gap narrowing trend going to continue? Well, the interest rate differential is a huge focus for the Aussie-Kiwi cross. Again, that cross has been relatively range-bound for the time being. We're more positive on the Australian economy than we are on the New Zealand economy, so we would look for that cross to bounce, but within the recent range.
Callum, I heard overnight that there was a lot more appetite now in Aussie Yen and Kiwi Yen as well. I mean, it's relation to this question. And a lot of them are FX margin traders, sure. From individual investors. Your Mrs. Watanabe, frankly speaking. Do you expect this trend to continue and to have a lot more impact on the actual interbank market itself?
Well, over the last week, we've seen pretty sharp falls in these crosses. So that was a correction from the uptrend that we saw in Q2. But on a trend basis, we would think that these crosses still look reasonably good buys and dips. But as I said, they can have very significant pullbacks, so care is needed. Well, speaking about the yen here, because some of the analysts are saying that the yen could further weaken because of the political crisis going on in Japan, apart from the fact that the Bank of Japan is all on its own now, having to restore the economy back to its glory days, having to extend those credit measures for a much longer time. So what are the prospects for the yen? Yeah, that's right. The outlook for the yen overall, that is on a trade-weighted basis, is bearish. The Japanese economy is having a terrible time at the moment. It may have seen the absolute worst in terms of the growth numbers, but those were truly apocalyptic. I mean, they've seen, you know, the kind of decline that we haven't seen for many years, if not many decades, in Japan. However, dollar-yen is stuck in a range at the moment, given that the fundamentals of both the dollar and the yen are pretty bearish. So we would expect dollar-yen to remain relatively range-bound in the 90s, but the yen to weaken on a trend basis against other currencies.
Okay, well, it's good to speak with you. Thank you so much for joining us. Callum Henderson of Stand Chart, giving us his currency picks on the show here.